Good evening. It's August 29th, and this is a Stock Odds podcast. This is Odds and Ends with Rob Friesen and Dave Singh, and we're here getting ready for our week. We're going to look at the markets, how they're set up to position for the week, and look at the data and stock odds to see if we can get any insights that we can share with you to help you with your trading.
Hey, do you remember Mexico earthquake that happened a couple years ago? It happened on the anniversary of the big one that was in 1985. You remember that?
Yeah, it was like to the day, right?
Well, they were doing all their sort of emergency preparation rehearsals and all that kind of stuff in the morning, and then it hit later that morning, I think. Pretty interesting. Well, we have another repeated date here. Yeah, Hurricane Ida. Right?
Mm-hmm. And I feel like we're kind of in a strange time in the market now. It's August, volumes are lighter. We've had a big month already. Labor Day's coming up. It seems like so much bad news or anything is already built into the price, whether it's the hurricane, Afghanistan, shutdown of the pipeline that supplies the East Coast with gasoline, and the market's not doing much. The futures are flat. Oil's down slightly.
Well, yeah, I mean, we've talked about this recently on some of our live shows with Joel, is how news can get factored in, and that's what you're kind of seeing here on a lot of different levels. I think the gasoline futures are kind of responding a little bit to some of this hurricane stuff, but there is a lot of it baked in. The oil's not responding as it normally does. You know what? I still, I want to look at what the odds have to say regarding oil, but like oil and basic materials, when you're seeing stuff like this going on with kind of the hurricane and the overhang with Afghanistan still, because, still a couple of days left here of, whatever could happen. So I'm not really super keen on shorting that, even though there's an opportunity to, look at them and say, okay, well, if the odds are relatively low for them going up, maybe they make good shorts. But you see that conflict there, right?
Well, I was studying the Seasonality Almanac for the last 3 trading days of the month, and in that, energy was expected to outperform and technology. So of all the 10 sector ETFs, those two were expected to outperform the spider for these last 3 trading days of the month. So that ties in kind of with what you're saying, that you don't want to be short energy.
Well, I mean, where the energy was weaker for the rest of the month, so it just kind of perks up at the end of the month, right? Mm-hmm. If I remember correctly, on the XLE, it sort of was weaker, coming into August and through August, and then spikes up a little bit at the end. But we had the Afghanistan thing kind of boosted a bit too, right? So that you can get macros that interfere with what would normally be statistical basis or seasonal basis for doing something, and that doesn't make any of that wrong in having a seasonal approach or having a statistical approach. It just means that sometimes you make some adjustments. Like I might say, hey, I really want to be long, technologies today. Well, if a couple big technology stocks were to miss earnings, that might damper the enthusiasm across the board. And why do I want to expose myself to that? I could just eliminate and focus on the other groups that don't have that catalyst. The same would be true, to oil or basic materials or, industrials or whatever it is. They're going to be subject to the macro. But do we see any other macros going on here besides what we talked about, the hurricane and the Afghanistan thing? Do you see any other macros going on?
There's not much of a catalyst, nothing big that's going to drive the market in the direction.
The market was waiting for Powell, right? Mm-hmm. So we had that on Friday, and it really lifted the markets. But he did indicate that, hey, taper might be coming along sooner, and we're preparing for that type of thing. When the market still felt it was was quite dovish. So we rallied. They were kind of a wait and see, and the markets were rising in anticipation, and then we got what we kind of wanted, and it went higher. And so even now with the futures, since they opened there at 6 p.m. Eastern time, they lifted up a little bit, pulled back a little bit, but no indication that they really want to go down at this point. So we'll stick with, seasonality for tomorrow. And usually the last trading day of most months of the year are slightly down, and August is no exception to. What's the SPY performance for the last trading day? Do you have that?
No, but I think we're up 2.25% so far this month.
Well,
So
we're up more than we're supposed to be, right? Like July was like 2.7% expected. We hit 2.44, and August was like 0.7 expected. And you said we're at 2.25 already, right?
Yeah, correct.
So there is room to pull back.
Yeah, and that last trading day, you do expect a pullback usually.
Yeah, so I'm kind of on the fence tomorrow. I mean, since we're up so much, I could see a bit of a pullback. The futures don't seem to indicate much of a desire to go down at this point, but let's keep that in mind. But the last trading day, I'm going to be a little bit more bearish for, just because that's been my experience and that's what the data says. I'm going to run through a few. Well, why don't you do the seasonality on the individual sector ETFs? Just run through them. What do you see in performance relative to the SPY? Is that for just these last 3 days, essentially?
Yeah, it's the last 3 days of the month.
Okay.
And it seems to be of the last 5 trading days of the month, a lot of the gains happen in the first 2 of those 5 days. So the last 3 days don't have as robust performance as the last 5 days. But looking at them, XLB, the materials, it's pretty much on par with the Spider. XLC, the Spider should outperform.
Okay.
Energy should outperform the Spider.
Okay.
By a healthy amount. Financials about the same as the Spider, and same with industrials. But technology, so energy and technology are the 2 strongest of the sectors relative to the Spider. Then staples, real estate, utilities will underperform or should underperform. Healthcare about the same, and same with consumer discretionary. So only 2 that stick out are energy and technology, and they could do nothing. They could do nothing for the next 3 days, but as long as the Spider sells off the final day, it's pretty consistent with what the odds would say. Okay.
Well, let me run through the same sectors, but this time I'll do 5-day output, so what we're expecting for the whole week. We'll start to get more granular when we do this show. Like if we do it daily, we can get more granular on what to expect for the next day. But right now, we're on a Sunday. We're looking out at the whole week. That week includes the last trading day of the month, which is Tuesday, and then the first trading day of the new month, which is Wednesday. And plus, there's sort of this anticipation of going into a long weekend. So Friday, the long weekend effect. And then things, really don't start getting rolling until somewhat back to business as usual on the 7th and 8th of September. But really the next week is when things really kick off more full blown. Everybody's sort of back in work mode for the fall. So it's an interesting week here. So we'll look at the next 5 trading days. That's from the close of Friday until the close of Friday again. Close of Friday to close of Friday. So, okay, I'm running the Momentum 5 screen and 5-day output. So I've sorted it by odds. It looks like technology dominates at 64.6 on the odds, with discretionary next, which makes sense because, you've got like lots of technology stocks in the discretionary, and communications, which is also technology, Facebook and Google. So 64.6, 61.5, and 58.8 for XLC. Then it starts dropping consumer staples, utilities, and so on. And it doesn't go below 50 odds until it hits XLE. So that's an interesting contrast. Normally, without any other catalysts going on, like Afghanistan or the hurricane, we would have a negative sort of more bearish stance here, it's actually quite significant in that the odds are 45 with performance of minus 2%, 2.08% for the week on XLE. And then XLF is at 43.9. So financials and oil weaker on the momentum screen. Let's flip to looking at an RSI 14 with a 5-day output. RSI 14, let's see how it argues with the momentum. And if we sort again, we have XLK coming in at the top at 66.7. So it agrees with the momentum. XLY is next. XLC is next. Everything's the same. Little bit of shuffling between the utilities and industrials later on, but they're all positive. And the only ones that are slightly under 50, healthcare and real estate, just slightly under 50 on the RSI. Let's go to percent B, which kind of takes standard deviation into account. We're going to do a 2 and 50 with a 5-day output, so a little bit more robust on that, not so sensitive because we're thinking about 5 days, right? So how does this perform? Sorting by the odds, we have XLK once again in the lead at 68.5. XLC's next, so it trumps the XLY, and then XLP, and then XLY. So interesting, if we have nothing showing up in the negative, we get down to XLE, slightly positive. It's second from the bottom, and then XLF still at the bottom like it was with RSI. So we seem to have some agreement here on this 5-day output that technology, communications, consumer discretionary is all kind of at the top. And the only other thing I saw was consumer staples, XLP, was also riding high. So what that means to me is there's a defensive category here that some investors are being drawn into these defensive names. So there might be expecting, technology being, priced to perfection somewhat already. Maybe it'll roll over in their mind, and they're kind of going more into the consumer staple stuff. Let's keep that in mind. It might be a good idea to have a little bit more balanced portfolio for, especially the next few days here, and that is to add, some tech and some consumer staples, right? Some consumer discretionary, and maybe even, some basic materials which aren't showing too bad. Industrials aren't showing too bad. So those are the categories that I would focus on. Utilities, it depends what the TLT does, because they have such a high bond component. We'd have to see whether the TLT is moving up or down. Right now, based on the Jackson Hole stuff, TLT shouldn't be giving anybody any problems right now. US dollar starting to pull back a little bit, which says, that can bolster oil a little bit more. It can bolster basic materials a little bit more. Anything commodity based can do a little bit better when the US dollar pulls back, which is what we're seeing. So let's keep that in mind too. Okay, anything else you got on your radar here?
No, but how does this tie into September? What do you usually see for September? A strong month, weak month? I know the volume picks up.
Yeah, September's a really weak month. I mean, if we go to just the seasonality for September, it is one of the worst performing months, right? So looking at our seasonality here, you got anything to cover while I'm pulling this up here?
No, it just seems that there's always this retail perception that as soon as Labor Day comes, volumes pick up, people are back, they're in there buying, which infers that the market goes up in September. But
I mean, a lot of the school buying has already been happening, right? Mm-hmm. So people buying laptops, and they're buying stuff from Staples and all that, right, for school. Retail, clothing, that's kind of pick up. And the best 4 months for retail is kind of August through November anyway. So there's a bit of that backdrop, and that's in the discretionary area.
And the
Now,
driving season's usually over, so
yeah,
pressure on oil comes off too.
well, I mean, one problem with sort of the last 5, 6 years of consumer staples and consumer discretionary is they've kind of become a little bit more intertwined. Like you see some discretionary companies that are in the staples, and you see some, staple companies that are in the discretionary. So it's become a little bit more mixed up than it used to be. It used to be a great indicator as a spread for, risk on, risk off. I mean, it worked like a charm until about 6 years ago, and now it's sort of a little bit more mixed, right?
Yeah.
Anyway, so looking at the September, we have the first trading day of the month is generally a little bit soft, which is different than a lot of other months. Like a lot of other months have a very robust first day of the month, and then the last trading day of the month is down, kind of what we are expecting for August. September is different. The first trading day of the month is down, and the last trading day of the month is up. And that could be because of the U.S. Budgetary cycle, which starts October 1st. It could be because of window dressing for some institutions that have their year end on September 30th. So it's possible that this plays out very similarly. The third Friday of September is the weakest of the whole month. So, and then it can rally. I've seen some Septembers rally a little bit at the end all the way into October, right?
Mm-hmm.
Wednesday looks like the best performing day of September through all the other Septembers. And we're expecting, slightly negative performance at minus 0.193. So not even 0.25% down for the month, but still one of the worst performing months. Let's just compare it to how would September do as compared to GLD, which represents gold, gold trust ETF. Gold is actually performs at minus 2.11%. And most of the days it kind of goes opposite of what the SPY is doing. So when first trading day of the month, when the SPY is supposed to be down a bit, gold is up. First Friday, when the SPY is down, gold is up. And the last 5 trading days of the month. Yeah, so it's the opposite. The last 5 trading days of the month, the last 3 and the last day of the month, the SPY is up and gold is down significantly. So very interesting. But that's the power of the Stock Odds Seasonality Almanac. Gives you some real insights into, the performance of stocks or ETFs, and you can compare with the SPY. And you can dig into, all kinds of different symbols there. So, for example, if we were looking to the first trading day of September, which is supposed to be slightly down, let's just see what kind of stocks kick in here. What do we see for the individual stocks? What's supposed to be strong on that first day? So, going to September 1st. First trading day of the month.
Got some tech stocks.
Yeah, it's interesting. You've got Workhorse and PANW. You've got Twilio, MTCH,
Match.com.
and you got some consumer discretionary in there. So kind of what we were talking about. You got some tech stocks. You got some consumer discretionary. You got some retail, you got some reopening trade stuff still going on. Interesting. What's strange is Tesla all of a sudden takes a big tank there, down minus 1.68%. Odds are 87.5 of that occurring on the first trading day of the month. So I'm not sure why nobody likes Tesla on the first day of September, but that's what the odds are saying. So let's wrap it up here and wish everybody a good week. And thanks for joining me, Dave, here. And let's Have a good trading week. Okay.
Thanks, Rob.
All right. Take care.